heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow out here in San Francisco. This is Bloomberg Technology.
Coming up, Ed will break down GM's decision to join Tesla's charging network. That's as the EV maker heads for a record-setting rally.
Plus, we discuss all things AI, from its use cases in the field of law to investing in the space with venture capitalist Wesley Chan.
And for today's Bloomberg Big Take, we'll discuss how artificial intelligence is taking racial and gender stereotypes to new extremes. But first, let's check in on these markets because, Ed, we're kind of muted ahead of the Federal Reserve next week. This is a macro perspective on how much the Federal Reserve will pause. Will they then hike in July? But at the moment, we have seen a downward trajectory for the dollar on the week. We're seeing the S&P 500 managing to get into that bull market territory, 20% off of its October lows. We're currently clinging to gains, only up 2.5. NASDAQ 100 up higher, up 0.2%. Some big tech names really driving us higher. I know you'll dig into that. Bloomberg Dollar Index actually just basically treading water on the day, but actually has been selling off over the course of the week as many start to buy in on the fact that maybe the Fed can pause this hiking cycle. Let's have a little look at what's happening in terms of risk asset of choice. We're currently seeing Bitcoin having a pretty torturous few days, 5-day run, and we're off by 2.9%. We're still clinging to that 26,000 there and thereabouts. But all of this comes on the back of some significant regulatory headwinds. Look at that downward trajectory when we got the news on Binance, and of course on Coinbase when it comes to what the SEC is doing. So notable that at the moment we're not seeing that move into tech stocks being reciprocated by move into Bitcoin, Ed.
Yeah, one big influence on this market is Tesla, up 5%. It's trading at its highest level since early October, end of September. The news, General Motors is adopting Tesla's North America charging standard. It's also having upside impact for GM, up 2%. But look at the downside movers. EVgo, ChargePoint, principally CCS standard offerings for charging networks, really taking a hit. The Tesla name has momentum. Just quickly look at this terminal chart. We're up for 11th straight session. That matches the streak of gains we saw at the beginning of 2021, 11 days that ended in early 2021. We don't often get technical on this show, and I'm not showing it in this chart, but I think about relative strength index. This is a stock that's at an 86 level, very heavily in overbought territory. It is trading above its 200, 150-day moving average. I raise that because it has momentum, but how long does this last? Really impressive outperformance. But what about the details here? We heard from GM CEO Mary Barra on a Twitter Spaces with Elon Musk.
As we looked at this and realized we could, really address one of the biggest issues that customers are telling us is, hey, I like EVs, but if it's going to be my only vehicle, I need to know that there's a robust charging infrastructure. So I think this gives us a huge opportunity to do something that's better for customers and to drive it to be the standard.
Is this just the next domino to fall? Is this something much bigger? Let's get the details with Bloomberg's Detroit bureau chief, David Welch. David, tell us how GM's going to pull this off.
Well, they're basically going to equip their cars starting in 2025 with an import that can take Tesla's chargers. Before then, they'll have the customers, the owners of those vehicles, will have to use some kind of adapter so that they can use Tesla's vehicles. But basically, it gives GM electric vehicle owners, and Ford for that matter, because they announced this deal, a similar deal previously, gives them all access to 12,000 Tesla fast chargers and some more of their regular chargers. So it gives these people a lot of options with probably minimal impact on their lives and not a lot of investment either.
Analysts, David, saying another win for Tesla. How does this actually help the revenue of Tesla? How does this help the business model of Tesla?
So Tesla, they still are going to make all of their money or most of their money selling cars. But they do have this business of charging where they do make some revenue. It's not huge money. Estimates are that Tesla can make it, anywhere from $1.5 billion to $3 billion by 2030 and even more after that with all of these customers of other companies' cars that will use their charging network. And if you think about it, Tesla has by far right now the most reliable EV charging network. And it's also the most mature compared to this patchwork quilt of other EV companies, EVgo, ChargePoint, others. They either provide hardware or services. And J.D. Power says Tesla is the most reliable. So I think more and more customers of other people's vehicles will start using Tesla chargers because the app says they're available. They're actually available. When the people get there, the charger actually works. It's a big problem for EV drivers. So with a better network, they'll win out and they will make revenue off of their rivals' customers in the same way they've made revenue and profits off of regulatory credits for years. All of this kind of, it may not be huge money, but it's still helping Tesla at sort of an opportunity cost to the other car companies who don't have their own networks.
David, on that point about Tesla's networks reach and maturity, we actually have this chart from Bloomberg New Energy Finance, which shows the Tesla fast charger network relative to CCS. And the chart tells the story, right? It is just so much bigger here in the United States. But the reason I bring it up as well is the title of the Bloomberg NEF research. GM crawls back to Twitter and Tesla to save its EV ambitions. You know GM better than anyone on the planet, pretty much. What did you make of Mary Barra breaking her Twitter silence to make this announcement?
Oh, look, first off, when Ford made the announcement, I went to GM and said, are you following next? And, you know, they sort of hemmed and hawed. I think they realized once Ford did that, they had to go in. And, you know, Tesla and GM have sort of traded barbs over the years, subtly at times, not so subtly at others. So I do think they didn't love having to do this. But ultimately, Mary Barra is an extremely pragmatic CEO. And if this will help her sell electric vehicles, if this will help her customers stay happy, I think she knows she has to do it. And I think, you know, going on Twitter to do it is probably not their favored way of putting news out, but it would also very, very effective sitting on the stage, or rather it was done by Zoom actually, I think, but speaking with Elon Musk about this is going to get them a lot of publicity for the fact that they're changing their charging network.
You know, Caroline, this is clearly giving Tesla and GM a boost, but again, let's go back to those movers to the downside and some of the rivals out there in the network.
Yeah, David, to that point, you mentioned EVgo, but also Pilot. There was a joint venture already announced by GM, as you referenced. Who does this hurt, perhaps more in the startup space, in the areas that, you know, I think of here in New York, the announcements that are being made of all the EV charging that's going to be put in, the capacity, and it was helping players other than Tesla. Who are the other battery operators, I mean, the charging operators out there who perhaps stand to forfeit here?
Yeah, look, this is going to be tough on them at least in the near term. I think medium long term they can adapt. They can put their own adapters on chargers, or they can change them up. But that will take some investment money, and these companies don't have a lot of cash. I think that's one reason the stocks are down. But the other is if Tesla's chargers are more reliable, and I own a Cadillac Lyriq or a Ford F-150 Lightning electric vehicle, and I can use it 6 months from now because I get an adapter. Why wouldn't I do that if I know it's a better network? So they're going to lose potential revenue on this thing, and that's what the market's looking at. I think it's going to be tough on all of these companies, and they're already in a not great financial position. You know, kind of speaking broadly as a charging industry, and the stocks are not doing that great either. So it's not like they have this amazing ability to raise capital because they're not loved as investments. David
Welch, as you say, GM aficionado, EV aficionado, charger aficionado. We thank you so much from Detroit. Meanwhile, let's stick with electric vehicles for a minute. NIO reporting a bigger than expected quarterly loss, fueling, of course, the concern that the company is losing ground in a highly competitive Chinese auto market. Its CFO said earlier this year that he's very confident that NIO can meet its target of doubling sales to 250,000 electric vehicles this year. However, look, shipments just slumped to just under 13,000 in April and May combined. Coming up, we have, of course, now going to pivot from the world of EV to the world of generative AI. It's tackling the personal injury case industry. More on that next. This is Bloomberg.
A New York lawyer told a judge he never meant to fool anybody when he filed a court brief full of phony legal precedents invented by ChatGPT. The lawyer who faces punishment for the brief asked a US district judge for leniency claiming he had no idea the free artificial intelligence tool could create fake case citations and court opinions. Generative AI tools promise to disrupt industries, but the technology also has many risks associated with it. So staying in the field of AI and the law, EvenUp is a generative AI startup focused on personal injury cases, with trained models using hundreds of thousands of pages of medical records cases compiled into possibly the largest ever repository of case data. The company just announced its Series B round led by Bessemer Venture Partners. And joining us now is Rami Karababar, EvenUp CEO, and Samir Dalakia, partner with Bessemer Ventures. And Samir, I'm going to start with you.
Sure.
A month ago, you came on this program and told Caroline and I have $1 billion to invest in artificial intelligence.
Yep.
And I said, well, how are you going to do it? And you didn't fully answer the question. This goes some way to answering the question.
Indeed. There has been an outpouring of interest, of course, by entrepreneurs around the world.
Inbound
coming in saying, hey, these are the folks to come and help us launch our ideas. And this is what we knew would happen. Whenever you have a paradigm shift as profound as large language models and generative AI, the creative juices of all the entrepreneurs around the world get going, and they try to solve novel problems in a novel way. And that's what we've seen. And EvenUp is one of the very first examples we've seen coming out of this allocation of that $1 billion.
Rami, that creative juices that got flowing were actually started in 2020. And I'm interested, how much has generative AI changed the game for you? How much had already you been iterating on making legal work in particular that much easier? And is sort of the momentum around ChatGPT just helping with the sales cycle?
For sure. We've been experimenting with generative models since the founding of the company. And we also use discriminative models as well. And the way you can think about what we do is we turn raw case files, typically medical reports and police reports, into AI-generated legal documents for injury attorneys. These legal documents value what these personal injury cases are worth, enabling injury attorneys not only to save time in legal drafting, but also maximize the value of their claims and helping the many millions of Americans that get injured every year in the US.
Rami, what is your response to the story that we outlined at the beginning of this segment? A lawyer who now has to defend himself because he relied on fake legal precedents that ChatGPT gave him. What is the risk for your company in that context?
I think it really comes down to how you're using generative models. The way our approach to generative AI is very different than a lot of other companies. We're strictly focused on one type of legal letter called the demand letter. And this is where the way we use generative models is in a pretty confined way. We feed it a handful of inputs and we're asking it to summarize it in prose. Since we're not scouring the web or asking for a lot of different types of use cases for generative models, the risk of hallucinations is significantly less. And separately, our demands are QA'd by a team of legal professionals. We've done thousands of these cases, and our clients haven't seen those types of results of hallucinations impacting their business.
And Samir, to that end, how was EvenUp attractive because it is such a specific application of generative AI and AI in general? Are you looking for those specific areas, particularly in healthcare, particularly in legal work, or are you seeing more broad applications that excite you too?
Certainly all the above, although I would say EvenUp is a perfect company for Bessemer Venture Partners to invest in. Bessemer has, for the last 10 or 15 years, been, I would argue, the leading venture capital firm investing in vertical SaaS companies. So whether it's Toast in the restaurant industry, Service Titan for plumbers and electricians, Procore in construction, Shopify for e-commerce, we've been focused on investing in companies that solve a particular set of problems for a vertical industry. And of course, the legal industry is the perfect vertical industry for this disruption in large language models. All they do every day as lawyers is deal in prose, in language. And so this is at the absolute intersection, sweet spot of what Bessemer likes to invest in.
Samir, what was doing this deal like? What does the cap table look like at the moment as well? Like, yes, you're on this. So is Bain. So are many others.
Yeah.
Who's convincing who? Are you convincing Rami? Rami convincing you?
It is a very competitive environment. Rami is an incredible entrepreneur. He could tell you how many venture capital firms he had interested in it. We are privileged that he chose to work with us.
That's a very polite answer.
And we have many friends. The folks at Bain Capital Ventures are friends of ours from a decade long. So You're seeing more and more of that, I think, partnering going on, but in spirit of serving, and I think you'll always hear that from Bessemer, we're in service of our entrepreneurs and in service of those companies.
You know, Rami, I'll give you the opportunity to give your perspective on that. I would note, you know, Do Not Pay. Josh Browder's been on the show with Caroline and I. They do something quite similar as well. So how did you stand out to all these venture capitalists that were fighting over you?
For sure. And our approach was just to do one type of document more affordably, more accurately, and faster than a human can on their own. And knock on wood, we've had some pretty good traction. It speaks volumes just to the value proposition we've been able to deliver to injury attorneys and again, ultimately their clients who are injured. For us, what is most important is finding a partner that is aligned in that mission. And I think Samir sold himself a little bit short there, but I think, again, Bessemer's lead in vertical SaaS. I think Samir had more generative AI investments than any other investor that we've spoken to, specifically within vertical SaaS. It made it an easy decision for us to choose Bessemer.
Rami, you just mentioned there, quicker than a human can. Is this going to reduce jobs?
We have not seen that. Ultimately, if you think about personal injury, you're talking about some of the most vulnerable times in individuals' lives. You're living a normal life, then all of a sudden something really bad happened to you. I can't imagine a human not being there to help these folks shepherd through the personal injury claims process. From what we've seen from our clients, they are spending less time on document review and document drafting, and they're spending more time with their clients. We're taking on more clients than they've ever had before.
Rami, Karababar, thank you very much indeed. Even Up CEO. Samir, great to have some time with you as well. Samir Dalakia, partner at Bessemer Venture Partners. Thanks so much for joining us. That was a really interesting roundtable about all things generative AI applications. Meanwhile, coming up, more on the fallout, actually, from the Securities and Exchange Commission's lawsuit against Binance, what the crypto exchange platform is telling its customers. From New York, from San Francisco, this is Bloomberg.
It is time for Talking Tech. First up, Taiwan Semiconductor Manufacturing seeing a dip in revenue for a third straight month. Sales at the world's largest supplier of made-to-order chips slid 5%, which indicates that the sector's slump has yet to bottom. TSMC executive has signaled a gradual recovery in the second half of the year and a resumption of growth in 2024. And Binance US is telling its customers to take action in order to protect their assets following the SEC's lawsuit. This comes as its banking partners seek to pause US dollar channels for deposits and withdrawals as early as June 13th. In an email to customers, which was also posted on Twitter, the company says, "We are taking these proactive steps as we transition to a crypto-only exchange. We will continue to vigorously defend ourselves, our customers and industry against the meritless attacks of the SEC," end quote. Plus, crypto firms are reshaping the landscape with its come to a banking system. In the US, firms are turning to smaller regional lenders to open accounts. Swiss and Asian banks are also playing a bigger role as to where assets are placed. The changes come amid increased scrutiny from regulators against that industry. Caroline.
In fact, crypto regulation and all that was being discussed in a venture capital conversation I had yesterday, Ed. I got a chance to sit down with Rebecca Caden of Union Square Ventures, based right here in New York. Dina Shaker of Lux Capital as well had flown in from the West Coast where you are for the Bloomberg Invest conference. And actually, when it turned to AI, they expressed some optimism there. The role in the shift that we're seeing in fintech and healthcare. Just take a listen.
I'm an optimist. I think I'm partly an optimist by trade and overall, but particularly here, I think the opportunities set to unlock and the efficiencies to create and the skills and abilities that we can't think of yet are going to outweigh the risks, which are there and are relevant, but are going to be manageable.
Okay, I like that they're manageable. Dina, do you have that same optimism that ultimately all the wringing of hands, worries about job implications, bias, will ultimately be outweighed by the positives in productivity and how it's going to help your particular area of expertise like healthcare?
Absolutely. I mean, we've been investing in AI for years, so certainly there is a lot that's new now. It does feel like a paradigm shift, but we were early investors in Hugging Face and Runway. In the healthcare space, we actually sit on a board together of a company called A-Life Health, which is using AI to transform fertility care. There is still so much more, and we're incredibly excited about the potential. Of course, notwithstanding the regulatory, environment that we're in right now and making sure that everything is done safely and also without bias.
go to regulation in a moment, but to the point of where AI is really disrupting, where's your brain space at? Is it more inbound, people wanting money, people calling themselves artificial intelligence companies, you trying to sort wheat from chaff? Or is it, how do I ensure the portfolio companies I have that aren't truly built on AI are ready for that disruption?
I mean, I think it's a little of both. Obviously, as a consumer, I love using it for bedtime stories for my kids and, recipes and so on. But as an investor, we're looking at what the really big platform shifts are going to be. And I think any tech company right now needs to take a really close and deep look at how they're using AI to make themselves more efficient, particularly in, frankly, in every field. But I would say when it comes to healthcare, there is so much opportunity, so much latency, so much bureaucracy. But it's a very different world when you're still talking about fax machines in the same sentence as ChatGPT.
Well said. And what about the fintech space, Rebecca? I know this is an area that you're particularly got some expertise in as well, across the board, as well as healthcare. Some have said maybe fintech isn't the first area of adoption for AI. What would you make of that?
I think that the incumbents across industries in healthcare and fintech and education have a big opportunity here, less because of their industry-specific nature, though there's some of that, and more that the idea that where there's rote tasks or efficiencies to be created by people, it can be a very powerful tool to create that. And that's cost savings, that's time savings, that's adding value into the stacks that's already there. And, you asked about kind of existing companies versus new entrants. I think one of the unique things about this technology shift that's somewhat different than if you think about mobile is that the incumbents not only have distribution advantage, but they have data advantage that's very, very relevant, and that the technology is easier to use. So integrating it into existing platforms is a lot easier than in prior technology shifts, so they can do it faster, get up to speed, and use multiple advantages. And I think you're going to see that now and for a while across industries that give these big players, a real opportunity if they can jump on it.
It was such a great conversation. You can go online to see more of it. Rebecca Caden of Union Square Ventures, Dina Shakir of Lux Capital. Meanwhile, coming up, we've got plenty more to talk about in terms of the world of venture and capital being put into it. Pigment snapped up $88 million in a Series C. What it's like raising money in this environment, and what's next for the business planning platform that's actually it's built in Europe and it's looking to go bigger in America. The co-CEO, Eleanor Crispo, is going to be joining us next. But first, let's just check in on what's happening with Netflix today. Evidence its crackdown on password sharing is working. Streaming giant is seeing a big bump in new subscribers, according to a new report from the research firm Antenna, up 5.5%. So in the last course of 2 days, it seems as though there's still some holdouts in our production team, but maybe, just maybe, people are being lured today at a subscription. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco.
And I'm Caroline Hyde in New York. Let's check in on these markets because NASDAQ treading some water today. We're up just 11 points. But remember, it had hit the high since April 2022. At one point, we saw the S&P get into a bull market, technical bull market, 20% off of its lows. We're still worried, tentative, about what happens with the Federal Reserve next week here in the United States. So at the moment, maybe just a little bit of caution as we end up the trading week, basically flat on the week for the NASDAQ. Two-year yield, though, up 7 basis points as we think about where in which the Federal Reserve has to go, how it has to tackle interest rates, whether or not that's really priced into the front end of the curve. So two-year yields just pushing up higher. Bitcoin currently down by 0.6%. Torrid week in terms of course, the regulatory overhang for crypto in general, but actually managed to be relatively resolute in the face of that. 26,000 is where we currently trade. Moving on, and let's go into some individual movers because there are some big moves going on. I'm looking at Tesla, of course, up almost 4% on the day as they sign that deal with GM as look really to be leveraging the power of their charging that they have in the United States at the moment. But Adobe's on the higher side, up more than 4%, going overweight, and some analysts are really thinking that this is a company to be leveraging, whereas we look at generative AI applications. Interesting that Peloton's up more than 4%. Who knows why? Big volume. At one point, up 19% on the day. At the moment, Bloomberg not reporting any real reason and catalyst into the surge in volume and actually the surge in shares, but we're coming down to about 4%. But one standard deviation move compared to the 20-day moving average. Blue Apron as well. Look, it's a penny stock, basically. We're seeing it only, $50 million worth in market cap. It used to be worth 800 million in excess of. We're up 60% on the day. This is a pay off some debt. So Blue Apron, one to be watching as well. But we want to be turning back from public markets to private markets at the moment, Ed. And a business planning platform, Pigment, just reported an $88 million Series C funding round led by Iconic Growth, as well as Felix Capital coming in on the deal as well. Let's bring in the co-CEO, co-founder, Eleanor Crespo, now, who's joining us from France. But the focus of this funding round is, look, Eleanor, you're going to be beefing up the business, going to be pushing more globally here in the United States as well. What services do you offer?
Thank you very much for having me. So first of all, just to reset the scene, to explain to everybody who we are. Pigment is a business planning platform that allows business leaders, no matter if you're in finance, if you are the CEO, the CRO, or the HRVP of your company, to take better, faster, and smarter decisions. The other point of Pigment is to quickly adapt to change. What we realized with my co-founder, Romain Nicoli, is that basically, as of today, business leaders usually have to take very strategic decisions based on inaccurate, incomplete, or siloed data. What we try to offer with Pigment, obviously, is to help these business leaders not only take the most strategic decisions, but also be able to adapt quickly to the current macroeconomic environment. So to give you a concrete example of what we do, as of today, as you can see, obviously the macroeconomic environment is what it is. You have inflation raising at different pace in different countries. And so any business leader needs to be able to answer in a very fast fashion. For instance, if inflation raises even more in North America, how that will impact my hiring, how that will impact my gross margin, how that will affect my sales process. Yeah. And ultimately, Pigment is here to offer you, to help you answer better these questions.
What's so fascinating is the problem that you're solving, but also your own background, the fact that you were a VC yourself before at Index, the fact that you were working at Google for a long time in terms of strategy. What was the funding environment like for you? How easy or hard was it to sell your vision and the need for capital at this particular macroeconomic headwind moment that you were just painting for us?
Yeah, so actually we were not raising this round. And what happened was very different. So we still had the money from the past two rounds, pretty much everything in the bank. So here, actually, we got a lot of interest, and that came from a couple of reasons. First one being that we are a must-have platform in the current economic environment. Everybody, every customer across all industries need to plan on a tool like ours. That was the first thing. And the second thing was, I think, the type of customers we managed to sign across all industries. So we managed to actually get on board and serve the most incredible customers in the likes of Figma, of Miro, of Airtable, Mozilla, Calvin Klein, AARP, etc. And really what happened with them is that not only they showed to investors that they were using us on a daily basis, but that also they loved us. And what happened really with this round is that the investors actually got some word of mouth from all of these customers that, this product was a total revolution in the way they would plan. And we actually got this round preempted by obviously these leading firms that you mentioned, Iconic leading the round alongside Felix Capital, IVP and Maritech participating. And really the reason was, I think, the traction that we got. Not only that, but we also managed to go very deep in the organization. Yes. We actually grew by 10x our customer base last year. And that was
Eleanor, I want to jump in and just ask you, because I want to understand some of how you manage that. First of all, you have runway, right? So you've raised $88 million in this Series C, $250 million to date. Where did this round value your company?
So actually, we are not disclosing valuation for a very good reason, is that for us, it's not a focus at all. What we are very proud of at Pigment is our customer base, our partners, and the fact that we had a tremendous traction in the past year. We grew our revenue by 7x last year only in North America, 10x in the number of users that are using Pigment.
Yes.
Really, I think the valuation is not a metric that we want to follow because we think it's not really the real value. What I can tell you, it was a significant upfront. And I think, for us, it's more the security caution and the freedom to invest even more in your product and the innovation than anything else.
So it's in response to growth, right? 10x growth, 10x in the user base last year. How do you deploy the capital to respond to that? You having to manage headcount, infrastructure costs?
Yes, so actually, I think we are going to do two major investments this year. So obviously one of them, which is a continued investment, and the most important one is in the product. So we are the most innovative platform out there by far, and we want to remain the most innovative platform. So there are a lot of very exciting things coming in the roadmap. AI being one of them, of course. I'm very happy to tell you more about that. The second big investment is our customer support globally, because obviously we are serving the largest companies in the world, in North America, in EMEA, and everywhere else. And so for us, what is important is to be able to bring the most tremendous customer experience to all of our customers. So these are the main two areas where we are going to put some capital this year.
Caroline, I cannot resist the temptation. We have a startup in the software space raising money.
Yeah.
Let's go there and talk about AI.
I mean, we've got to. You just led us there, Eleanor. I mean, artificial intelligence. And just looking, we saw some video of how you interact with your product, and it already looks like it's sort of generative AI and predictive AI in some way. How are you folding that more into the business model?
Yes, so actually, AI is already something that obviously we had thought about it since the beginning. First of all, with my co-founder Romain Nicoli, we started to integrate an AI roadmap from day one. And as of today, obviously, we have several new features in beta with the partnership with ChatGPT. And for us, what is critical about the way we integrate AI within the platform is to make the most intuitive customer experience for pretty much any business user on the platform. Again, our goal is to have literally any business user within a specific company to use Pigment. So for us, it's all about the simplicity of the platform. I can give you a concrete example around natural language that you can use within Pigment to ask questions such as what was my revenue in North America last year? And that you can ask in natural language and the platform will answer. So for us, the idea is really to democratize even more the access to the platform.
Pigment co-CEO, co-founder Eleanor Crespo, French entrepreneur, French startup coming for the US market. Caro, thank you for joining the show. Now coming up, all things AI, investing and more with FPV Ventures' Wesley Chan. That's next. This is Bloomberg.
The hype is absolutely remarkable, and I've never seen anything quite like it. AI has been having an impact for decades, and this stuff isn't brand new.
If I'm right on AI and the impact on it, I mean, it's already making the top coders 7 to 8 times more productive than they were 5 months ago. If it's as big as I think it is, NVIDIA is something we're going to want to own for at least 2 or 3 years, not for 10 months.
We want to engage with the regulators to say, what's the next generation of AI you're going to do that's going to make it even more effective? And therefore, maybe it's not totally explainable, but you understand that we're not using it, we're using it for the right purpose. And so changing the regulatory, I would say, process around the use of AI is going to be an important next step for every industry.
It's just more software. That's how I would see it. And we've been bringing more software into finance for a really long time. And there's been all kinds of breakthroughs and there's been all kinds of problems. It is statistical pattern matching. It's extremely powerful and it's interesting. But I do not see AI achieving what some would call the Holy Grail. Everybody wants to know what's the S&P going to be in 6 months.
Can you tell me?
And I can't.
Okay.
And neither can the AIs.
Some hype, maybe some reality there. Some speakers from our Bloomberg Invest Summit this week giving their thoughts on all things AI, the space, of course, that we can't get enough of. Let's stick with it for our VC Spotlight. We're very pleased to welcome Wesley Chan for more. He's, of course, the co-founder and managing partner at FPV Ventures. And I'm sure you have a view or two on whether we're hyped in terms of AI exuberance, valuations even.
You know, it's fascinating, right? I've watched the cycle happen so many times. You know, I've been an investor for 15 years, and this happened when mobile phones first came out. There was a hype there, and you know, there were all these funds started on mobile. And today, you know, everything is mobile, right? Like, can you imagine trying to book an Uber on your web browser? It just doesn't happen. You do it on your phone. And that hype sort of happened in 2000 and went away because we had everybody incorporating mobile into their products and into their apps. And today we have AI, and there's this massive hype where people are saying, oh, we got to invest in all these AI companies. But you know, 10 years from now, 5 years from now, we're going to be incorporating AI as part of our products, part of our strategy. We've been doing it for 10 years, and we're going to do it for another 10 years later. So it's an interesting cycle, but you know, we've seen this happen over and over again.
Okay, so take the long-term view, manage to sort of move out of the exuberance and the headlines. How are you picking which companies in this current cohort you want to be backing? Because I know you're all about the founder, but so how are you ensuring that the portfolio companies you have are resilient to the disruption, and how the founders that you back right here, right now, are the right ones?
Again, we take our lessons from history. In 2010, when I started at Google Ventures, we invested in a lot of mobile companies, right? You know, I was an investor in a company called Parse, which wound up selling to Facebook, and you know that Facebook wound up shutting it down. It made some money. The founder did well, but those mobile companies aren't around anymore because, again, it starts being incorporated as table stakes into every product. I think we're going to see some of that with AI again, right? This is a very, very contrarian view. Every one of my colleagues is rushing into AI. Some firms are creating AI funds just specifically for looking at AI, and we are not investing in AI companies for the sake of AI. We're investing in companies because there's going to be great business models that will be created by the AI, and we don't even know what those are yet. There are all these mobile infrastructure companies in 2010 when that happened. All of those no longer exist. There's very few of them. The companies that wound up doing super well in that market had yet to be invented when that mobile craze came up. It was Uber, it was Airbnb, it was these companies that figured out a business model where mobile enabled it to happen. And I think we're going to see the same on AI. There's going to be new companies that will change the landscape of how we do business, how we do work, how we buy products, how we book cars, how we book flights. And we're looking for those companies where that business model will be changed by AI rather than AI for the sake of it, right? There's a lot of hype going into it, a lot of money going into it. You're going to see these wars between Google and Microsoft and OpenAI, and you know these companies are well funded, buying outrageous amounts of compute power. And you know we want to be in the companies that are enabled by AI, not because AI exists.
Wesley, it's been almost a year to the day since you were on Bloomberg Technology because you'd raised and launched your $450 million fund.
Yep.
Based on what you just said, have you not pivoted at all in the first 6 months of this year to respond to what's happening around you in terms of strategy and where you deploy capital?
We are investing in mission-driven founders that have a unique insight on how to change the world. When Larry and you know, I spent my first 15 years of my career at Google. I joined very, very early. There were very few people at Google when I joined. It was Sergey Brin's chief of staff, and Sergey is one of the co-founders of Google. Google is an AI company today. Back then, nobody saw Google as an AI company. They saw it as an ads company, the search engine, but Google has been using AI for 15 years. We're just investing in founders that get what new business models get enabled because of AI, and we've been doing this, you know, for the last year, and I've been doing this in my career when I was at Google Ventures in my previous fund for the last 15 years. Some of our best companies are enabled by AI, right? There's business model certainty. That's where we're investing. So I'll give you an example. We have a company called StrandTX, and they are redesigning the future of mRNA drugs. We have the mRNA vaccines that we got from Moderna and Pfizer, and there's a new generation of drugs coming, and they redesign their mRNA sequences, and they can figure out how to target the cells that need the therapy, that need the drug. So they can target a cancer tumor. They can target your liver cells if there's a defect in your liver. We have to deliver a drug into it. And they use some AI to figure out how to create those sequences so the drug is most effective and not toxic at all, so you don't have any side effects. We have another company called Inveda, for example, that is doing AI. They use AI in the data on mass spectrometry to find natural compounds that are able to be future drugs for people that help cure disease, skin diseases, cancer. These natural compounds have been in use for a while, but how do we turn them into drugs so that they're just not like weird things that people buy at a drugstore? They're using AI to figure that out. There's business model certainty in these businesses, right? If it's a drug company and the AI helps them get to a drug faster, then we know that the drug is very valuable and the market values that. So those are the type of companies we're investing in. They're run by great founders, and the founders truly get that AI is helping them get to the value faster rather than just creating a new AI
Wesley,
platform.
those are the types of companies, and I actually am really interested in the mechanics of how deal making has changed over the last 12 months. So you launched with $450 million last year. Because of the inbound and activity around AI, are you having to write larger checks or write checks with more frequency to keep up with the energy of your industry?
Well, we've never, ever invested into the hype. When there were grocery delivery, companies where people were putting billions of dollars. I remember getting pitched 5 of these grocery delivery companies. In my place in New York, every week I was getting a new postcard for 30% off some 15-minute grocery delivery company, and at one point there were 15 of them, right? We didn't invest in any of them. Same with the scooters. We don't invest into the hype. So we're investing, for example, into drug discovery, where AI enables that that ability to get to the drug faster and to find a cure for cancer faster. And there aren't many people competing in that space for AI drug discovery companies. In fact, every time we do a deal, there's probably like one or two other investors, looking at that space because everybody's chasing these overhyped AI companies where we don't know which one's the winner. So we're very, very contrarian in how we look at companies. We do AI, but we don't do AI for the sake of AI. Just like in 2010, all the people that invested in mobile for the sake of mobile, those companies are no longer around. We love companies that are around for decades and centuries, if that's possible.
Mm-hmm.
FPV Ventures co-founder and managing partner Wesley Chan. We fit a lot in there. Thank you very much for your time. Now, coming up, how one generative AI tool can further enforce bias through its imagery, in many cases worse than humans can. More on those risks and what's at stake next. This is Bloomberg. ByteDance, the parent company of TikTok, is testing its own AI-powered chatbot, joining China's AI race. Not much is known about Grace, the project's code name, but Bloomberg sources say it's being tested internally among ByteDance employees. It's worth noting that TikTok is also experimenting with its Taco chatbot, which appears as an instant messenger on the app. Perpetuating harmful stereotypes and biases is one of humanity's biggest ills, but a Bloomberg analysis of a text-to-image tool found that bias from AI is even worse. It's today's big take, and joining us for more on this is Bloomberg's data viz leader, Leo Nicoletti. Okay, so Bloomberg uses Stable Diffusion. It gives commands and generates thousands of images. Talk us through what you did and why.
Yes, so we basically carried out an experiment with Stable Diffusion, which is one of the biggest open source platforms for AI-generated images. And being open source makes it easy to also analyze and experiment with. And we wanted to understand how deeply ingrained biases might be in this technology. So we asked it to create thousands of images of workers for 14 jobs, and also different criminalized categories. And then we analyzed the results. And what we found was a really systemic pattern of racial and gender bias that doesn't just replicate stereotypes, but it actually makes them worse. It stretches them to extremes worse than those found in the real world. Women and people with darker skin tones were underrepresented across images of high-paying jobs and overrepresented for low-paying ones, for example.
It's truly depressing, and I suppose ultimately the problem here is society, and Stability AI and Stable Diffusion is just emphasizing that even more. When you're coming to your reporting, when you're looking at the outcomes, how much was there discussion about the fixes here? Is it about auditing some of the algorithms? Is there a way of ensuring that we don't, or is it about the prompting that's being put in?
Well, one of the important things is about transparency. So it is a good thing that Stable Diffusion is open source because that enables people and researchers to actually improve the model and make it better. So that's, in a way, it can be better than closed source models like DALL-E, for example, where we don't really have that much knowledge into how they're being improved and by how much.
Cara, let me just jump in real quick, and I would just point out that a spokesperson for Stability AI points out that all AI models have this inherent bias to them, but their point is that by open sourcing it, Caroline, that they can work towards overcoming that rather than closed or non-open source models.
I wish we could discuss this day in, day out, and Leo, I'm hoping you can come back and join us a little bit more on, but more imminently go read his work. It's with Dina Bass as well. Leo Nicoletti, thank you for staying late for us in Italy. It's absolutely fascinating piece, and ultimately a bit depressing as it stands. But we don't want to end on a low note, Ed, because the time is nigh. We're wrapping up. It's the edition of Bloomberg Technology wrapped up, but you can get more.
Incredible week, and I've forgotten that it started with Apple and WWDC. Yeah. You can recap on the podcast wherever you get yours, Apple, Spotify, iHeart, and on Bloomberg. From New York, from SF, this is Bloomberg.